Bank, saying we're trying to be an outlier here, 0.5% higher. The Taiwanese index is trading with some losses.
In the near term, of course, the Nifty on the upside needs to cross 24,857. Nifty Bank is down about 0.25%. We're at about 53,444.
Renewable energy and energy transition in general. It is obviously a growing sector.
We have 700 crores on a balance sheet. We have enough money to finance all our growth ambitions.
If you look at what 75-80 crores of saving, that would actually, if you look at FY24, that almost translated around 5.5% of revenue.
We have come up from the lows of the day for sure. It's around a recovery of 75 points from the lows.
In terms of the issue, it's a complete fresh issue. The entire amount being raised will be deployed towards the growth of the company.
The capex recovery that we are talking about is a reversal of the slowdown that happened between 2012 and 2021.
Primary cause, I would think, is the disruption, the skirmish, the war.
Nifty holding on to those gains. The Bank Nifty, though, has come up from the highs. The Midcap index, that continues to outperform.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and it has been a quiet day. Not very much up, not very much down, and sort of middling along. This is, of course, Closing Bell, and we'll track markets for the next hour. But it's also an interesting last hour because, while we'll talk stocks, etc., for the next 30 minutes, but 3 o'clock onwards, you'll hear from the new Reserve Bank of India Governor. And I think that's going to be a very, very interesting one. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. Now, folks, looking at the indices, it's like nothing's happening in this market, right? Such lackluster trends coming through. But I think, one defining trend is that the banks, they've not had the best days right from the morning.
But I think it's par for the course, right? Yeah. I mean, we've had a bit of a run. I think we're in that range. I think on the upside, we're looking at this 24,750. Tomorrow, you'll have the weekly contract, because at least as of now, it appears that 24,770 to 24,800 appears to be the range that the bears believe will not cross. So let's see how that goes. But plenty of action from the broader markets, actually.
Yeah.
Individual stocks.
And I wonder what's happening with railway stocks, right? I mean, budget is 1st of February, and still some time away. There is no noticeable news flow per se. I mean, I'm not really going into the indices, etc., because the levels, etc., don't change. But, maybe the railway names, right? IRFC, IRCON, the Railtel, BEML, but also the rolling stock makers. I mean, Kernex and I think Titagarh. I think all those stocks as well. There are a bunch of those, and all of them, and the other ones will also come into view. Look at that. Kernex is up 5. I think Titagarh also, the last I checked, was up about 6% or so. Not, as I said, no news flow, just a lot of interest. And looks like, in a way, retail has jumped back into the game full throttle. When you see stocks like these moving, I mean, I think that usually is one of the explanations, maybe the dominant explanation out there. A little early maybe for the budget, but I mean, actually, maybe not, right? It's just 1.5 odd months away. And these stocks have not moved, I think, at least for a year or so. But that's it. That's one pocket which is moving in a significant way. Surabhi.
Oh, absolutely. Throw in more names, even from the private sector, something like Jupiter Wagons. It's up about 12-13%. So maybe the market's smelling some sort of an order win or some sort of additional spend from the railways. That's one active side of the market for sure. But there are other interesting names. I mean, newsmakers. Look at Office Solutions, where there is sort of a lot of talk about the block deal happening and existing investors selling a large chunk of equity, but the stocks was completely taken off, 7% on the upside over there. There are names like PNC Infra, 13% up because of the order wins that they've announced in Uttar Pradesh. So individual newsmakers are definitely finding traction. Headline level, I'll just name some of the large caps, just for what it's worth. The drags today include big boys like Reliance, like TCS. They're not really contributing, very sluggish. L&T, ICICI Bank. So these are your, big boy culprits, which are just taking it very, very easy. Not getting too much of traction on most of these names. But look at Bajaj Finance, We've been talking about this stock for now 24 hours, and it seems that this investor call that they held with the mutual fund and institutional community yesterday, that perhaps it's worked well, because it's a very nice trending upchart today on Bajaj Finance.
Well, that's right. If you just look at a few more stocks, Jio Financial Services, that's the one that's come into the F&O basket. Just take a look at that stock. It's spiked up in the last few minutes. Volumes as well are very, very high. So Jio Financial Services comes up for you on the screen. A couple of other big names that are moving from the broader markets. They're not stocks we talk about on a daily basis, but Jain Irrigation. The last I checked, the volume was 1.5 crore. Normally, we see around 50 lakh shares out there. So it's moving on very, very high volume. So that one comes up for you. And Greaves Cotton. Streeters seems to be very excited about anything that has anything to do with EV. So you have, this one that's doing well. You have Precision Camshaft that does retrofitting, which effectively means you use your old vehicle, you buy the kit, and you install it in your vehicle. That one as well is up close to 10%. It's already had a big run, and it continues with that run. So good going on that one as well. And IMFA from the metal pack, we have been talking about the stock here on CNBC-TV18, explaining to you all about how the chrome ore shortage globally could support stocks like IMFA. And now, in fact, that one as well today, almost at around 1,000 rupees. I think it hit 1,000 rupees in today. So that one as well, moving well. Volumes rather high on that name as well. Well, let's find out on the index. How do you trade, though? Mitesh Thakkar is back with us. Mitesh, that's sort of a day where you have some green on the screen, but still the Nifty is not able to take out those resistance zones on the upside. How do you trade the index?
Yeah. So I think, Nigel, I've been calling for this consolidation. The overall setup, the way it looks like is that we have had a pullback rally of 1,500 points, and then, we are now kind of taking a breather. It's a market which is not turning negative, but we'll need more consolidation to have strength to get past the level of 24,800. So I think till then it could be a few days. It's already been about, this is the fourth day. It's already been about 4 days. So could be another 3-4 days of activity between 24,800, 500 zones. And broadly, as long as we're not breaking on the downside, I think the chance of an upside break are slightly stronger, given the fact that the daily and the weekly indicators have started turning on the upside. So in that sense, I think, the market for the next few days might be slightly contracting and quiet, but overall it's a positively biased market.
Okay, all right. And Mitesh, stocks, what are the trades last hour now?
Yeah. So on the stock side, I have, a buy on Petronet, which is a buy with a stop below levels of 335 for a first target of 350. And Shree Cement, I think, the cement stocks have done well, JK Cement, Ultratech, etc. Shree Cement is coming into some kind of an upward bias trajectory. So buy here with the stop at 27,050 for a target of 28,000.
Okay, all right. Thank you very much, Mitesh. And we'll keep coming back to you through the course of the next hour or so. But Avenue Supermarts is down a little bit. Goldman Sachs has cut their earnings expectations for what the company will be able to do. Mangalam is here with details. Stock's down about 3. And of course, from the highs, it's come off quite a bit. Mangalam, take it away.
Well, DMart is under pressure in today's trading session on the back of a Goldman Sachs note where they've cited pressure coming in from all the other quick commerce players and the competitive mode when it comes to value retailing for DMart thinning itself. The company has gone ahead and looked at increasing discounts, to match the competitive intensity as well. And while a large part of their stores are in the metros, the headroom for growth comes by beyond the top 10 cities itself. And to that extent, will be very important to see the store opening for DMart going forward. Citing lower revenue expectations, Goldman Sachs has gone ahead and cut their FY 25, 26 and 27 EPS estimates by anywhere between 4 to 6% and that's led to a target price cut as well from 4,000 to around 34.25. They always remain seller on the stock, and as a result of which we're seeing further decline in DMart's stock price today. Mind you, the stock is now in F&O, so one can take fresh short positions out here, enabling a further downside risk on the stock. So we'll keep an eye out on that because up until last month, it was only a cash traded stock.
Okay, all right, got that. Mangalam, thanks very much for it. That is Avenue Supermarts under pressure today. We've got Prakash Diwan joining in. Prakash, good afternoon. Actually, good to start with this space, right? Retail Avenue for the reasons that Mangalam was just talking about. And also there's this large IPO and it's getting a good response. And from what one hears right now in the so-called grey market, I'm talking about Vishal Mega Mart, cash-rich company, don't need further equity capital to sort of, grow. They were sounding fairly confident about their business projections when we spoke to them in the morning. So just take us through retail. Where would you place Avenue? Would you be interested in some of the newer names that are going to be available now on the street?
Good afternoon, Surbi. So you're right. I mean, the space is certainly getting a bit crowded. We always knew that it was very competitive. DMart has possibly been, the one which has been challenged the most, given the onslaught of quick commerce. And now with Amazon also throwing its hat into the ring, it's only going to get difficult. But what it does to the entire sector is that it gets into a phase of consolidation on the earnings side. And whoever ends up becoming smart enough to open up stores in the right places, manage the right kind of product mix, will probably emerge as a winner out of this whole race. Remember, Trent also went through, of course, you can't compare DMart with Trent, but from a business evolution standpoint, Trent also went through a bit of consolidation, and then they figured out what they wanted to do, and Zudio was born. I think DMart will probably start innovating itself on the DMart Ready part, which is far more fulfilling than just a visit to the store, and they'll start probably sweating their assets in a more effective way. So I would write it off in the sense that it's going to go down and start kind of struggling. The stock will probably show some sort of a reaction, and as Mangala pointed out, the fact that it's in F&O after a long wait. A lot of people who believe it's overvalued do find it very easy to short. So it's going to be volatile, but I don't think fundamentally it's going to make that shift downwards so rapidly. If it happens, it'll probably be a consolidation. So I'm quite positive on that. Within the retail space, if you look at Vishal, these are opportunities that are emerging because they cover very different geography and very different tiered markets, right? And with the Mahakumbh Mela coming next year, there's going to be a huge, I told you about this sometime back. This year will probably be marked as one of the, that will be an event which will mark the revival of the consumer demand in some of these tier 2, tier 3 locations because of, the fact that everything is going to be centered around this in Jan and Feb. So it's going to be good for them, but let's see. We'll of course wait for the price discovery post the listing, but it seems like a good bet. Worth taking a view of the long term once it gets listed.
Okay, all right. Hi, Prakash. Good afternoon and good to see you. And Prakash, what about these EV plays, the non-ICE plays? Ola Electric is the one that we track. I think that made a low of 70. It's almost at around $100. You have Greaves Cotton, where you have a special situation that could pan out. I'm not sure whether you've done some math on that, but Mr. Kedia got in, I think, 200, 210. The stock from the day's low is up 8%. And, the other one, Precision Camshafts, they have been talking about this retrofitting. That as well has been a big move, I think 20% in 1 month. Any view on any of the three names?
So good afternoon, Nigel. So I think Greaves Cotton definitely stands out as a very good optionality that's kind of seeing the light of the day. Eventually, you will see that value unlocking happen once that demerger is through. Of course, the fact that some market investors have come in just makes the counter a bit much more attractive for retail investors. But I would still go with the fundamental approach that this would start doing well. One of our friends had presented this in another recent conference at about $180, and from there on, you've seen the kind of move that's happened because certainly people have become aware of what it can do once the EV business is demerged out of that. So sum of parts is far more than what you buy it for today. You still probably have about a 25-30% upside in the short to medium term, and of course the long term is much more stronger. So I would pick out of the three names that you mentioned. Precision Camshaft has a retrofitting solution, but I don't think whether commercially that's yet viable because you really don't know what happens to the aftermarket after you've replaced your IC engine with this. So there are lots of experimentation that's going on in that space, Nigel. We'll have to see how that kind of gets evolved. But
Greaves Cotton is the one. Got it.
Okay, I think the feed has just frozen.
So Greaves Cotton is a stock that Prakash believes that because of the special situation, he believes that could probably be some upside. Though keep in mind the stock has already rallied 25% in 10 days.
Okay, Greaves Cotton, not Precision Camshaft. That's
Greaves,
the one. Yeah.
Yes.
Yeah.
By the way, the other one, which is the office sharing the company, which is I don't know how you pronounce it.
Office.
Office.
It is called only Office. Yeah, Office spelled differently.
I keep saying AW. Yeah, Office. Look at that. I mean, it started flat. Actually, it started even slightly lower. And from there, it's come up very, very nicely. I think there was a couple of months back, maybe 1 or 2 months back, there was an initiation from one of the, I think Novama or someone had initiated coverage. And a pretty steady growth rate over the last many years. We've, by the way, have had the management with us on the program as well. So that is something which is doing very well.
You know, great story, and it went to around 900 rupees, and suddenly from there it came down to around 700. I think all of this in the matter of around 45 days or thereabouts. So I think people were wondering what's going on. I guess that this block deal needed to get out of the way, and it seems now people are buying into that, because otherwise it was a very sharp run up and then a sharp pullback as well. 25% it pulled back very, very quickly. So today I think a bit of a relief that that block is out of the way.
You know, there are these other companies. Pull up Ixigo if we can. I mean, Ixigo is another. It's a travel it's an OTA, I think, and it's coming up about 7.5%. So 154, 155 on Ixigo, IXIGO, and recent listing has done pretty poorly after coming to the market. That's something. Shriram Properties actually is another one, which is jumping up about 11% or so, about 118. So these are slightly newer kind of names. Shilpa Medicare had come off a little bit from the highs, from 950 odd levels. It had lost about $100, more than 100 rupees actually. Shilpa Medicare is coming up with gains. Shelly Engineering is another one, 7% gains, 1450 or so on Shelly Engineering. I'm not sure if we have Prakash back with us. Okay, I think we have Prakash with us. Prakash, so, you know, some of these names, of course, sharp moves, and of course, everything moves so fast, right? That Reeves Cotton move is $100 coming in, 10 days, right? Very, very sharp. But any thoughts on what's happening with these railway names today? Or just, a little bit of retail interest? I've not seen any news flow per se.
No, I think it's, Prashant, more of, the mood that the market's kind of sensing from the government's, stand on expanding the capital outlay. And railways is one area which was unstoppable till about early calendar 24. By Jan, Feb is when, you saw that pause happen. If that were to be resumed and it would probably pick up steam till March because of elections and so many things didn't happen. But I can see a lot of awards we spoke about Kavach the other day, how, that's kind of looking so bright. The same thing is happening to some of these businesses like Railtel and Rights and all, who have started getting a lot of orders from beyond their core area of competence, which is only from the government or from the railways. So what's happening is that their books are looking much more qualitatively stronger. And it's a value play. People have seen 30-40% come off in the last few months. And if you had to kind of start reinvesting your money into something, given the rally that you've seen, large caps haven't been really doing well, to be honest. There's a little bit of a sideways move now with the large caps. So it's these mid caps that have started offering some sort of a value. So it's a little bit of a flavor of the season kind of a thing at this point in time. There's nothing, as you rightly said, backed by news flow. But I think it's a long-term story that people don't want to, kind of slip out on or forget about. And they're buying after 30-40% of a correction.
Okay. All right. Got it. Prakash, thanks for that. By the way, the stock that Prashant was just talking about, Ixigo, Lee Travel Avenues, there's a small block there as well that happened. Large chunk of equity moved around, and that could have led to that outsized move, 6-7% that we just saw. However, speaking of stocks that are having outsized moves today, PNC Infra is now up, I think, 13% or so thereabouts. The company, I think, has completed a particular project in UP. Let's actually go across and understand this. Vivek has been standing by very patiently. Vivek, sorry, we're just looking at a lot of stocks that are moving around. But tell us, what's powering PNC to this extent today?
Well, after a while, you're actually seeing quite a bit of traction as far as the infrastructure stocks are concerned. And today is one particular day, you're actually seeing quite a lot of infra names move. PNC Infratech, when you're talking about this particular development, largely operationally inline development. When you're talking about the company's arm Hathras Highway, it has completed a HAM project, a hybrid annuity mode project, worth almost 738 crore. A provisional completion certificate has been issued. The company says it is eligible for an early completion project, a bonus for this particular project. Now, remember, as far as PNC is concerned, the company is actually grappling with some negative news flow. Remember, in October of this particular year, MORTH, which is the Ministry of Road Transport and Highways of India, actually barred the company and a few of its subsidiaries from participating in NHAI as well as MORTH projects. So for the next year, the company will not be able to participate even in the tenders as far as road projects are concerned. This will lead to worries as far as the order inflow is concerned. However, at the end of Q1 as well as Q2, the company held on to its guidance as far as order inflow is concerned. 13,000 to 15,000 crore is what the company anticipates in terms of order inflow. But as far as revenues for FY25 is concerned, the company is actually expecting a degrowth this time around. So positive news flow, but remember, the company will face some issues in terms of order accretion given the fact that it's been barred from the bidding process.
Okay, all right. God, that's PNC Infra. Which is in focus. By the way, just check the move on Delta Corp as well. Delta Corp is now up about 7%. There's obviously that demerger news that's underway, some changes that they're doing. But this is a big news. Not sure if it is linked to the flashes on online gaming. We'll in fact try and get those sound bites out and just see exactly what is it the CEA that he's talking about in terms of over-regulation in areas like online gaming. He's talking about crypto, online gaming, a couple of other spaces as well. But anyway, whether it's linked or not, we don't know. The fact is the stock is on the move. Prakash, Delta, any interest?
No, not really, Surbhi. I know the real estate demerger is definitely something which takes away a lot of risk out of this business. But, it's going to be so competitive for them to be able to do this and start rebuilding themselves on the basis of hospitality and pure real estate build-ups. You have, by the way, 3 new hospitality businesses that are hitting the IPO market very soon. And that's also kind of getting to be a market that's where investors are actually spoiled for choice. So I don't think it's time to celebrate Delta as yet, unless the core business kind of, starts reporting profitability, which is convincing enough. I would really look at that.
Okay, all right. What we'll do is, Prakash will say thank you for now. Appreciate you joining us on the program today. And it's a pleasure, as always. The tease is coming up on your screen. The first address by the new RBI Governor. I mean, it's, of course, taking charge today. That's coming up at 3 p.m. So lots of interest around this. I mean, a long 6-year tenure of Shaktikanta Das, of course, finished. And we've got the new RBI Governor in place. So there'll be, of course, I'm assuming an introductory sort of speech, and then there'll be opportunity for questions as well. Our colleague Lata Venkatesh is at the RBI, and we'll get you more on what comes out from Mint Street. We'll take a quick commercial break here. Market's not doing anything, of course. The indices, I should specify, not doing very much. As we discussed over the last 20 minutes, lots of stocks, of course, making large moves. Take that break. We're going to come back. Nimesh also joins in for D Street Chatter. And of course, we'll be ready at 3 for that RBI address.
Welcome back. Well, we are awaiting the address from the new RBI Governor. That will start any minute now. So before we get to that important event, let's take stock of a lot of the primary market action. And it's a big buzz out there. 3 main board IPOs have opened out. Vishal Mega Mart, there's Mobi Quick Systems, and also Sai Life Sciences. Vamakshi is doing a roundup of all the 3 companies. Vamakshi.
Well, yes, Urbi, it's, the primary markets are buzzing off late. Let me first start off with Mobi Quick. The IPO size is 572 crores, price between 265 to 279 rupees per share, with an expected market cap of somewhere around 2,100 crores. Now, this is a fintech company providing prepaid digital wallets as well as online payment services. And as far as valuations are concerned, the sales to market cap based on Q1 sales annualized stood anywhere between 1.51 to 1.57 times respectively, based on the lower as well as the upper price band. The company also received good, interest or response from the anchor investors. They managed to raise 257 crores from them, and this list includes several notable investors as well. And the IPO on day one itself has been oversubscribed. The next IPO that we're watching out for is Sai Life Sciences. The IPO comprises of 950 crores of fresh issue, 2,093 crores of OFS. The price band is between 522 to 549 per share, and the expected market cap is somewhere around 11,420 crores. This company researches, develops and manufactures small molecule new chemical entities. It offers tailor-made services to biotech firms and global pharma companies. Now let's also look at how the valuations stack up for this counter. Keep in mind that the margin profile based on FY24 numbers is stood at nearly 19%, which is much comparatively lower as compared to some of its entities, but the valuations are much higher as compared to some of its peers. Lastly, let's also focus in on Vishal Mega Mart. The IPO size for this is 800 crores. This is entirely an OFS. The price band is between 74 to 78 rupees per share, with an expected market cap of 35,168 crores. Vishal Mega Mart is a diversified retailer that is present across India. It has nearly 645 stores, and most of its stores are in Uttar Pradesh, Karnataka and Assam. When we compare it to some of its peers, the company has an operating margin that is better than Avenue Supermart but is lower than Trend. And as far as valuations are concerned, the company is offered at 55 times FY26 estimates, and this is also lower as compared to D-Mart, V-Mart as well as Trend, which trade anywhere between 80 to 110 times FY26 estimates.
Okay, all right, got that. We did catch up with all the managements today, and we'll play out some snippets of those interactions as well. By the way, that's interesting. Swiggy is launching One Black. Should we call it black? I think the A is missing intentionally over there, just in case you're wondering if it's a typo. I don't think it is. An invite-only premium membership service. So more ways of hooking on customers. I know about Swiggy One, but now this is Swiggy One Black. Let's see, need to upgrade maybe. All right, but
updated Swiggy user.
yeah.
Swinging it away.
Absolute
swinging it away.
Actually, bit of both. But yeah, this is interesting. Let's see. We'll figure out what's in store for customers. But for the time being, let's figure out what's happening on D Street in terms of all the chatter and all the stock-specific buzz. We have Nimesh joining in. Nimesh, really quiet day on the indices. What are you picking up?
Well, absolutely. Another day of a very range-bound kind of a trade. Even the volumes are a bit tepid as well. But I understand there's going to be a small MOC basket selling at a leading FID. So maybe in the last 30 minutes, you might see some reactions on some individual names because of that basket selling. So that's something to track. In terms of sectors, metals and cement is where some bit of institutional interest is back. There are some buy flows as well. But I guess the theme continues to be the broader market outperformance. Even in today's market, the Nifty and Bank Nifty are quite range-bound. There is a lot of action in the broader market stocks. So that trend continues on the back of the flows into the domestic mutual funds. But from a overall perspective, it's a tepid day from a flows as well.
Okay, all right. Let's get to the stocks then, Nimesh. I think earlier this morning you were saying plenty of khabar is there. Fill us in with a few of those stocks.
Okay, so the first stock on my list today is Shell Engineering. Big move on that name, and the stock actually is at record levels. The volumes on the higher side because there were multiple block deals in today's market. And I understand a leading long-only fund was a buyer in today's block. So at these levels, a leading long-only fund has entered into Shell Engineering. So that's the first name. The second stock is Swan Energy. Big move in that name as well. The volumes are again on the higher side today. I guess for Swan, the biggest trigger is the stock exchange approval for the relisting of R Naval, and that's going to be a big trigger for Swan, and that's expected very soon. That's the reason why Swan is buzzing in trade today. The third name is GMR Airports. Within the F&O names, this is one stock which stands out. For second day running, I understand there are very strong buy flows. So delivery-based buying has started in GMR airports from some long-only funds at these levels. So that's the third name. And the last is ABFRL. Again, while the stock has been consolidating with a positive bias, I understand ABFRL is very close to raising funds via QIP. So likely this week, maybe you'll see a large fundraising via QIP in ABFRL as well.
All right. Nice, interesting list of chatter, and Nimesh, as always. Thank you very much for that. Swan, by the way, Nimesh pointed out, right? Swan is basically back to its highs of February 2024. It made this high at about just under 800 rupees back then. Then the stock halved to almost about 420 odd rupees or so, which was the lowest level. And it's come back. So let's see. I mean, if this is a fresh move above the previous highs which it made towards the start of the year. But more opinion is what we want to get to you. And this is coming in from Neelkant Mishra, Chief Economist at Axis Bank. His view is that the CRR cut was necessary as it may help to bring back credit growth. Neelkant, of course, is an astute watcher of the economy. His view around the time of the budget, remember, was that the contraction and the fiscal deficit will hurt. That's come to pass. Listen in to some of that conversation.
We think that the CRR cut was very necessary. I think it helps bring sustained money into the economy. So as you know, it's base money, it is high-powered money. 1.16 trillion could actually become 5 to 6 trillion over time. And this should suffice to bring credit growth back. We also expect, this is not yet there, and of course our 7% growth forecast is predicated on that there should also be, and there is likely to be, in my view, some more macroprudential easing so that credit growth starts to bounce back up a bit. In the next 6 months, as the government catches up, and October has already been a pretty good month in terms of the pace of fiscal easing. And so you may actually end up with a much lower pace of fiscal deficit than you had in the first half. And which means that there will be an impetus to growth. And you are starting to see, you must have seen that, car registrations have picked up in November. There is an improvement in some power demand. There is improvement in the number of launches of real estate. So there are signs that October was the bottom, and we are starting to recover. I am 100% with you that there will be a debate and a discussion on whether, when we rebound from here, we land up at 6.5 or 7 or 7.5. I do think that our trend growth is 7. So if we don't artificially slow ourselves down through policy measures, I think we should be able to get back to 7%. Investment to GDP is likely to keep going up. And when that happens, so even if your GDP growth is 7%, your investment growth may be 8 or 9, maybe in 10%. And your consumption growth could be 4.5 to 5%. Within that, there will be a divergence. At this stage of development of the economy, inequality is bound to go up. And therefore, the segments like FMCG may only see 3% growth. And some of the segments which cater to the higher income households may see faster growth. The capex recovery that we are talking about is a reversal of the slowdown that happened between 2012 and 2021, where of the 7% points decline in investment to GDP ratio, 5% points came from real estate. And I would say 1.5 to 2% came from the decline in investments in new power capacity. And the rest came mostly from areas which are inputs to real estate, like metals, like cement, like construction machinery. Now, if housing construction really picks up, and I think that policymakers should actually focus on that, I think the investment cycle will be up and running.
Okay, well, we'll take a very quick break, but any moment now, we will be getting that first address from the new RBI Governor. Back with that in just a bit.
Welcome back. We'll hear from the new RBI Governor in just a bit, but for the time being, let's turn our attention back to the markets. Mitesh is back with us to help us out with some trading calls before markets shut down. Mitesh, tell us what's on your radar.
So, Tata Communication, I think, Nigel, that's near the day's high, up about 3.5%. BTST here with a stop at 1828 for targets of 1855. And the other one, the auto pack has kind of underperformed in this rally, but I'm hoping that Tata Motors and Maruti picks up. So for the timing, I'll go with Maruti. That's a BTST. I would want to see the stock clear 11,320. So buy about that. If not today, maybe tomorrow. And keep a stop below 11,290 and look for targets of 11,400.
Mitesh, if possible, I wanted your view on Trent. Post those numbers, people were just wondering whether or not growth is slowing down or stock is too expensive, went down to 6,300. Well, for those that were daring enough, they believe in the story, they've got a good entry point. And the stock is now at 7,100.
So, Nigel, I think, the stock went through normal correction. See, before that correction, the stock had rallied from soft 4,000 to about 8,200 levels. And then we had some kind of a pullback. And now I think, from the 6,300, 6,350 levels, I think it's given a trend reversal signal. So with today's movement, I think as long as the stock is above 7,000, look for this rally to extend to about 7,350, 7,400, and in a good case scenario, even 7,650. And then we'll take it from there.
Okay, quite a mover today. Suddenly, Trent has woken up, and how? Got it, Mitesh. Thank you very much. You enjoy the rest of your day. We'll catch up tomorrow with the markets. We've got Mayuresh Joshi joining in from William O'Neill. Mayuresh, great to have you on. Let's start right there, right? Look at this move on Trent. I don't know whether it's suddenly getting people excited because there's also an IPO now, Vishal Mega Mart. Vishal Mega Mart obviously is coming at a much lower valuation compared to Trent. Which one would you rather buy? Both? Either? Neither? I don't know. What do you think?
I think Vishal has done exceedingly well, and they've got a legacy of their own. So it's well spread out. They've got a good brand pedigree as well. And therefore, I think the kind of numbers that they're probably doing is getting reflected on their balance sheet. Obviously, it's an OFS at this juncture. But again, I think the company is doing quite well in terms of cash flows itself. Similarly for Trent, I think the way they have reinvented themselves, obviously there's a huge correction that we saw, primarily on two reasons. One, I think valuations have become too stretched after they hit an all-time high a few months back. But at the same time, I think there was a lot of skeptics who were arguing whether growth will come back and numbers will show a compounded increase year after year, what they've probably done in the past 2 years. But as we've seen in the past, they're reinventing themselves. They've got a good strategy on board over the next few years as well. Zudio has done exceedingly well for them. And again, I think the reimagining of Zudio that they've probably done, the price points remain extremely attractive and lucrative in terms of both same sales store growth, volume growth. And therefore, I think on the consolidated numbers, what they're probably doing with Zudio, what they're doing probably with Westside, Sara, a lot of private labels on the Westside format as well, which is aiding margin growth and margin performance as well. I think numbers might hold up for Trent. Now the stock is expensive, shall remain expensive. The only issue should be remains that if they miss a quarter because of elevated expectations. But till that point of time, I think if they deliver a number, that the momentum can very well continue.
Okay, that's Trent. Very quickly, Mayuresh, you didn't tell us about Vishal. I don't know if you've seen the issue or not, but quick 30 seconds. You like it or haven't seen, avoid? What is it?
No, so I just mentioned. So I said they've got a good distribution network. They're present in most parts. They've got the good cash flows. And therefore, I think they've got a brand category behind them as well. So yeah, I think investors can apply, but I think we need to probably have a little bit of a longer term view because this money is probably not coming onto the balance sheet at the moment.
Okay, fair enough. Well, let's hear it out from the management themselves. We caught up with them in the morning talking about the plans going forward. Here's Vishal Mega Mart.
Our revenue CAGR has been 26%. Our EBITDA CAGR has been 24.6%. And a PAT CAGR has been 50.9%. For the last financial year, our return on capital employed has been 71%. And just as a matter of record, in the last 3.5 years, we've generated free cash of around 3,000 crores. the conceptual approach has been that we will maintain the gross margins at current level.
Okay.
And therefore, we do not see EBITDA, etc., growing through pricing action. That's what we've done over the years. And if we have operating leverage, to that extent, it'll show up in the bottom line. They are very excited about our business. Their intention is to be long-term investors in the company. And I'm personally confident that they would not do anything which would cause any concern to any investors in any which way.
Okay, all right. Mayuresh is still with us. Mayuresh, I don't know whether you track Jain Irrigation. Out of nowhere, when we started the show, we were just highlighting that 1.5 crore shares were traded on a stock that normally have 50 lakh every day. Now there are 3.5 crore shares traded. The stock has gone through the roof. Track it? Any view on it?
No, I don't track it after today. I think the darling of yesterday is, but I don't track it anymore.
Mayuresh, I want a quick view on a couple of other names. The cement pack is buzzing today, and what's outperforming today is actually Dalmia Bharat. That's up close to around 3.5%. Yes, it's been a big underperformer. I think from the peak, it's still down 25%. What's your view on it? I recall when the numbers came out, the street was saying that it's a weak set of numbers. But I think the call that we had made here is that it'll open lower and maybe, in fact, it'll see buying interest because of the valuations. Your view at around 1,965?
So decent performance last time around, Nigel. And again, I think the expectations of the second half remaining strong for the pack as a whole continues. So to that extent, I think because of Maharashtra elections, we probably might see a dampened Q3 in terms of expectations, but Q4 where the recovery will probably come through. We've already heard and are hearing about reports of price increases being taken in large parts of the country. And therefore, I think as these price hikes gestate into the market, there might be one round that might even come through in the next 6 months. Having said that, I think the expectations in terms of volume growth seems to be decent, not just for Dalmia Bharat, for the entire pack as well. The expectations in terms of leverage playing out, with price hikes being taken into cost remaining moderated, operating leverage clearly gets played out as utilization levels will pick up for the industry as a whole. And therefore, I think as government capex picks up, specifically in rural urban affordable housing, in roads, ports, infrastructure development, I think the volume growth should also come back very, very strongly in Q4 and Q1 of the next financial year. Well, having said that, I think anybody holding Dalmia should hold on. What we really like is Ultratech within the large cap names, JK Cement within the mid cap.
Okay, well, I know interesting sort of thoughts there, Mayuresh. Coming back to you, but we want to just play out a few more sound bites from the Motilal Oswal Wealth Creation Study. The theme, of course, this year was betting on and profiting from bruised blue chips. There was a panel discussion yesterday. There was Ramdev Agarwal, Amit Goela, partner Rare Enterprises. There was Anish Shah of M&M, but there was also Akhil Gupta, vice chairman of Bharti Enterprises. And this particular portion is about Bharti and the turnaround that Bharti saw. And of course, for Ramdev Agarwal, Bharti was a big winner, one of his best well-known sort of bets, which paid off big time. So here is a interesting back and forth on that name.
As a growing company in 2002-03, at 25, they came out with public issue, I think, at about $45. And in 2003, January, they declared the break-even. And then at 24 rupees, we bought, and the stock went to 1180 in next 2.5 years. I mean, 50x in like 2.5, 3 years. So that was the ride I had. And that's why I have been meeting Sunil and Akhilji off and on. But I was stunned to see the kind of capital management they did, in the sense that they went to Africa because they had so much of cash flow. They didn't know where to deploy. And so I don't know whether I would call it as a capital misallocation.
We did have a difficult time in Africa, but that was, I would say it was a growth market. But of course, some of the currency problems have been very severe, which we never anticipated. Nobody can actually. Not a terrible decision, but yes, some internal mistakes in terms of execution. We are back on track. So not a real bad capital allocation in 2010, when things were just phenomenal. are making so much money that if we were not able to grow at that time, it would have been not good for the investors.
No, Bharti's done a phenomenal job of turning around things. They faced maximum pressure at a point of time. As an incumbent operator, whatever I have read and experienced, I don't think an incumbent has ever faced this kind of a pressure from a new entrant. Like it was like in basketball, you say full court pressure. It was that kind of pressure here, so. And they fought back and they came back, which was quite extraordinary here, so. And I think now they're here to stay, so. They fought it and they fought it clearly on customer service, and and they brought down their cost to be able to operate at the structure at which the new person was operating.
Okay, and now we have the visuals coming in. That is RBI Governor Sanjay Malhotra just getting ready to address the press. Promises to be a pretty interesting interaction. Let's see. He will, of course, lay out the agenda before him. And over the last couple of days, there's been enough talk, enough chatter about how there's a bigger change of guard at the RBI because several members of the MPC, their terms are coming to an end. And we need to see how sort of the mandate is carried forward, considering the market's expectations are that after this 50 basis points of a CRR cut, the RBI will eventually move towards rate cuts, perhaps in the first quarter of calendar year 2025. Okay, let's see if we have, no, the governor is not yet talking. We'll see if we can sort of get to that in just a bit. But
there's a head of communications at RBI who's, of course, I think, getting the press there in order before the new governor starts to speak, and we'll just be able to go across to it, a bit from now. I think there'll be an opportunity to take some questions as well, and I wonder, how much the governor, of course, can say at this moment. Remember, his first Monetary Policy Committee meeting will be in February. Let's just cut across.
Privilege to have amongst us, for the first time, the 26th Governor of Reserve Bank of India, Shri Sanjay Malhotra. Governor sir has kindly agreed to address us and interact with us in today's conference. Sir, we have with us 23 media persons from different media houses, and I, on behalf of all of us present here, welcome you to this press conference. Now I would request you to please make your address, sir.
Thank you very much. Am I audible? Yes. Is the mic working? Okay, thank you. So good afternoon to all of you, and thank you very much for coming over here at a very, very short notice. I do not, actually intend to make, any detailed statement on any of the major issues which pertain to, this august institution. It's my first day, and so if I start playing my shots, from day one, from ball one, I don't think, it will be appropriate on my part. And as I mentioned, to a few others yesterday in Delhi, I would first, like to see, and I would like to, understand the various issues, discuss, with my officers, with the DGs, EDs, get into, the grips of all the various issues that RBI is supposed to be looking into, and then come back to you, wherever it is required. So this is primarily more, of an introduction. Some faces, of course, quite familiar, and some new to the media as well as, to your audience. And so let me, first of all, say that it is indeed an honor to head this prestigious institution. And more than an honor, it is a huge responsibility as well, as you are all aware, with the various tasks, functions that have been entrusted to this central bank, including the monetary policy, the foreign exchange, reserves management, the currency control, the payment systems, spreading financial inclusion, banking regulation, growth of credit, ensuring liquidity, and so on and so forth. But RBI has, as I said, is an august, it's a prestigious institution, and it has a huge legacy. Some very commendable work, I think, RBI has done over the years, and it's all because of the hard work and the sheer diligence, the upholding of the values of public service by the staff, by the senior management, and including my predecessor, Mr. Shaktikant Das, etc. And so I will continue to uphold the legacy and take it forward. I am aware that the RBI in its 90th year has given to itself the theme of stability, trust, and growth. All these three, I think, very, very apt pillars on which to work. So all these three broad themes that have been chosen, very, very pertinent. Ours is still an economy which needs to develop as we are entering in this Amrit Kal, and to realize the vision of the Viksit Bharat as in 2047, the huge responsibility that we have in ensuring that the growth that this country actually has, that continues, that is part of this theme, and that will continue. Stability in policy, again, very, very important, and this is something even in my previous role we try to give a stability, a continuity in policy. So whether it is taxation policy or fiscal policy or monetary policy, I think all businesses, all people, they do need this continuity and stability rather than a day-to-day kind of a policy. So we continue to uphold this value, this principle of stability. And again, trust. I can assure you that this institution, what it is basically because it has been able to earn the trust of the people, and so whatever decisions are taken, they will be taken with public interest in mind, so that the trust that the public has reposed in this institution, that not only continues but is strengthened. While stability, as I mentioned, is important, we are also aware that we are in a constantly evolving, constantly changing. This world is dynamic with geopolitical tensions, with the impact of climate change, and political uncertainty around the world. So, as with other organizations, where change, the only constant that it says, is change. And so we have to be conscious of this fact, that while we do maintain continuity and stability, we cannot be stuck to it, and we have to be alert and agile to meet these challenges while we maintain a policy continuity. Secondly, I do believe that one of the most important roles of the central bank here is to spread financial inclusion with the banking sector, banking and the non-banking finance companies under its fold. Huge responsibilities for financial inclusion. We have, of course, traveled a lot with in financial inclusion. especially with regard to making available and accessible banks to the doorsteps of each and every nook and corner of the country. But there is still more to be done, and so we will collaborate. I think that is going to be a key for this. We need to collaborate with all our stakeholders, especially the financial regulators, not only for their needs of banking and their needs of credit, but even their other financial needs. We need to collaborate with the financial regulators and the central government and the state governments so that the benefits of financial inclusion, formal financial inclusion, reaches everyone. Another key pillar which I have been always following and supporting from day one, since I entered my service, and being an engineer myself, which has been reported quite widely, is to use technology, and where we started from 30 years ago and where we are today, I think it's a totally different world. Those who are my age especially would be able to appreciate as to how